and welcome to Blythe Business News. Today we're welcoming back Mark Learmonth. Mark is Chief Executive of Caledonia Mining Corporation. Caledonia listed on the New York Stock Exchange, the AIM market in London, and the Victoria Falls Exchange in Zimbabwe, all with a symbol of CMCL and a London market capitalisation of around £205 million. Caledonia is a gold miner operating in Zimbabwe, for those who don't know. Mark, welcome back on the programme. You've just announced your first quarter results. Can you give us a quick overview of what they contain?
Yeah, thank you, Tim. It's fair to say that this quarter has been a very challenging quarter for the company, both at Blanket Mine and at the Bilboes project. So by way of overview, gold production in the quarter was 16,000 ounces, so considerably down from the approximately 18,500 ounces that we did in the same quarter of 2022. Costs have gone up. The on-mine cost has gone up from about $700 an ounce to about $1,200 an ounce. Now, very good, about $300 of that increase was due to the effect of Bilboes, which I can talk about in a moment. But yeah, it's been a very challenging quarter. And then right at the end of the quarter, we did get a bit of a cash squeeze, a working capital squeeze, as we transitioned from selling our gold to Fidelity to selling our gold and exporting it ourselves. But that was just a temporary issue. It's a very challenging quarter.
We'll talk about Bilboes in a moment, but I just stay with Blanket. The issues that have impacted the production, have they now been resolved?
Yeah, there was a series of things which individually were insignificant, but coming as a package, they did have a significant effect on production. So a case in point is we had two instances where the winder, the number 4 shaft, failed for a couple of days each time. We had a recurring hang up in one of the ore passes at Central Shaft that lasted for about 6 weeks or so until we could clear it, and that meant that we had to put in place alternative ore handling arrangements and tramming arrangements underground, which affected our capacity and also had an adverse effect on costs. Now, most those issues have now been addressed, and you see that in April we produced about 5,200 ounces. Now, that of itself doesn't look that good, but actually you must bear in mind that April's a very short production month for us due to cut-off issues and also due to the number of public holidays. So there's only 23 working days scheduled for April. So 5,200 ounces over 23 days equates to about 80,000 ounces a year, which is the top end of our guidance range. So we do stand behind our guidance for the full year of 75 to 80,000 ounces. And I think the other issue is that whilst our costs went up from $700 to $1,200, of that increase, that $500 increase, 300 was due to Bilboes, which maybe we can talk about in a moment. That still leaves 200, which is attributable to Blanket. And the vast majority, the vast bulk of that increase was down to electricity, which is we were using more electricity than we'd expected at a higher price. Now, the higher electricity usage is going to be with us for some time until we can rationalize the use of infrastructure at the mine. But we are now beginning to see a fall off in the rate at which we pay for electricity, not only because of the solar project, which we brought on stream in the quarter, but also we've now changed our supply of electricity, which is we're now importing directly from Zambia and Mozambique. So we are seeing our electricity costs come down a bit. So the signs are now that things are improving. And so yes, we stand behind our full year guidance of 75 to 80, and our full year on-mine cost guidance for Blanket of approximately sort of 800 on-mine cost per ounce.
Okay, thanks for that. Now, as you said, these are the first set of results to include now the performance, the ownership of Bilboes. What do you think we can expect from Bilboes in the future? Well, what's the prospects for the Bilboes?
Well, the plan for Bilboes is as it always was. I mean, let's put this in context. We bought Bilboes as a very large, high-grade sulfide resource. So it's got about 2.5 million ounces at a grade of over 2 grams a ton, and that will, in due course, be be commercialized in a way that creates a mine that's producing about 170,000 ounces a year for about 10 years. Okay, so that's the plan. That's the real reason we bought Bilboes. In the short term, however, we had hoped that we could start a small-scale oxide mining operation, which is near surface material that, frankly, we're going to have to move anyway to get at the underlying sulfides. And that was going to produce perhaps 50,000 ounces over the course of the next 2.5 years. So in the context of the bigger sulfide project, the oxides is frankly immaterial and insignificant. The frustration we've had this quarter is in any event, even if things had gone to plan, in Q1 we would have spent a lot of money. We actually spent $3.5 million. We'd planned to spend slightly more, actually, about $4.5 million doing the pre-stripping for the oxides, and then only start production right at the back end of the quarter. Now, as it turns out, we did start production at the back end of the quarter, but we only produced about 100 ounces in the quarter. We had planned to produce, I think, about 300 or 400 ounces. So, but that was always going to be the case, that we were going to spend a lot of money in the quarter and only start to harvest the benefit of that towards the end of the quarter. The frustration we've had is that the initial target areas for oxide mining have come up with disappointing grades, and so we're having to refashion the mine plan for the oxides to move to other target areas, which is taking time and that incurs costs. So the plan going forward over the course of the next sort of year or so in respect to the oxides is we would expect to have a business that broadly washes its face. So on a cash basis, a cash neutral basis, which means that then we can maintain the existing workforce at Bilboes, which is about 150 people, who we want to keep, because obviously we don't want to retrench people, but we actually want to keep them because we think they're rather good, and they will have a role in the bigger sulfide business. So that's the first reason for continuing with the oxides. And the second reason is we're going to have to move this stuff anyway. So if we can start moving this stuff earlier, well, we'll do that. So let's keep our focus on the sulfides. We commenced work in the quarter on a revised set of feasibility studies, and as we've always said, we are looking very carefully at how we turn that resource base to account with a view to balancing faster growth and minimizing funding dilution. So we're exploring a sort of a multi-stage development process, which we could characterize as a hop, skip, and a jump. Another one which will be just a hop and a skip, and then the third one will be just a jump. And we're not in the business of just increasing production. We're in the business of maximizing NPV per share for Caledonia shareholders. And so our approach to all of this is to try and identify the most judicious way to commercialize this project with a view to balancing growth, minimizing dilution, and therefore optimizing the return to shareholders. That work on the feasibility studies started already. I'd expect that we'll come to an in-depth conclusion on the preferred way forward, probably about this time next year, perhaps a bit less than that. So that's the work that's already started.
Okay, let me take you away from the mining for a little moment and actually talk about the gold itself, because you've also recently announced that you're now enabled, empowered to sell gold directly outside Zimbabwe. This might sound a little obscure to some of the viewers, but can you just, in simple terms, explain the significance of this move?
Yeah, this is the regulations that enable us to do this were introduced sometime last year. And actually, in our Q3 results last year, which we published in November, we did say that the rules had changed and that we were now henceforth allowed to export our gold ourselves and sell it directly. But it took quite a long time to convert a policy announcement into operational activities that satisfy the requirements of the Reserve Bank. So having started work on this in sort of January this year, it finally came to fruition in early April. And what it means is that previously we were obliged to sell our gold to Fidelity in Zimbabwe, which is a subsidiary of the Reserve Bank. And whilst we had no difficulty receiving prompt and full payment from Fidelity, it was a matter of concern to shareholders that we were at risk. There's a credit risk. The involvement of the Zimbabwe Reserve Bank was perceived to give rise to a credit risk. And so we've addressed that now. We still deliver our gold fidelity. They refine it up to about 99.5%. That satisfies the requirement of the Zimbabwe government that things must be beneficiated in country, but it's still our gold. We still own it. And then we export it to Dubai, where it is sold. It's finally processed by a refiner there, and then we are paid directly into our US dollar bank account in Zimbabwe. And typically, if I just had a telegraphic transfer notification this morning. It's Monday. We delivered last night in Dubai, and we were paid this morning. And it just makes things much simpler, much cleaner, and it addresses a concern that's been floating around for quite some time by on the part of foreign shareholders.
And finally, looks like you've had a trickier than expected first quarter, but many of those issues you now put behind you, and you've explained what's going on. Bilboes, I guess the feasibility study may well be into 2024. But what should viewers be expecting to come out of Caledonia in the rest of 2023?
I'd like to see, and obviously we report quarterly, so I'd like to see our Q2 and our Q3 results come out, which show Blanket has returned to the rude good health that we've expected from it in previous years. So we'd like to see production increase, our costs come down, cash generation to improve, and really to sort of steady the ship so that we're in the best position possible, so that by this time next year we can put our best foot forwards with the with the commercialization of Bilboes, which actually is the thing that's going to set this set Caledonia on a path for further growth.
Mark, thank you very much for that. That was Mark Learmonth, Chief Executive of Caledonia Mining. As I said at the start of the interview, Caledonia listed in London on AIM, on the New York Stock Exchange, and on the Victoria Falls Exchange, all with a ticker of CMCL. That's it for this edition of Blythe Business News. Thanks for watching.